Welcome to Market Week in Review for the week ending August 27th, 2021. I'm Sophie Antal-Gibert, and I'm joined today by our Chief Investment Strategist, Paul Eidelman. Hello, Paul.
Hi, Sophie. Good morning.
Good morning. It's great to see you. And I'm very excited to talk to you because we're going to get some intel from you hot off the press, what some of the news was out of the conference, the Jackson Hole Symposium this morning, where Jay Powell spoke, obviously head of the Federal Reserve Board, Jay Powell. Can you give us some insights into what did he share? How are markets reacting? Any additional impressions that you had? Maybe starting with, what did he actually say? What did you take away from his main message?
Yeah, so I think this was an eagerly anticipated speech here on Friday morning. And what Powell basically did was to walk through his economic outlook, but he also sprinkled in his personal views on when it would be appropriate to start tapering asset purchases. And I think that was really the focus for investors this week. And to put the cart before the horse a little bit, it seems like Powell agrees with the majority of the FOMC in thinking that it is going to be appropriate for them to start reducing the pace of asset purchases or sort of quote taper this year. And to kind of translate that into something that's a little bit more meaningful, there's three FOMC meetings still scheduled for the rest of this year. There's one in September, one in November, and one in December. And we think that kind of translates to a November announcement. December seems a little bit too late to make an announcement of a tapering decision because it always takes the Federal Reserve Bank of New York some time to implement those decisions and how they actually trade securities. September also seems a little bit too soon for an announcement because Powell did hedge some of his comments, noting that the Delta variant has really picked up a little bit. So really the guidance from Powell's speech today narrows in the timing of tapering pretty squarely on that November FOMC meeting. And that's right around the sort of same time that we had been forecasting and expecting. So it hasn't really moved the needle that much for our own personal views, but it really has helped to crystallize and provide more guidance in that direction.
That's helpful. So it sounds like you were maybe not entirely surprised by some of this guidance and the timing. How are markets reacting, especially bearing in mind that, back in 2013, when we had, taper talk, suddenly it became the taper tantrum. Markets didn't react very well. Right now, it seems like they're pretty calm. Am I reading that right? Or is there more to the story there?
Yeah, I think markets this morning are calm, if not outright strong. And when you kind of look at global equity markets, the MSCI All Country World Index is trading up about 70 basis points this morning, which is a pretty good result. In the US, we're trading up about 60 basis points. So some pretty good strength globally. And interest rate markets are fairly calm as well, with the 10-year Treasury yield flat, if not even down a little bit this morning. So we're not really seeing that same kind of stress and surprise and revolt, if you will, that kind of followed Ben Bernanke's famous taper tantrum speech back in the summer of 2013. And I think there's probably three reasons for that. Number one, the Fed is moving towards this decision for good reasons because we've had such an impressive recovery in the economy. And as we've talked about a lot on these videos, corporate earnings have been exceptionally strong. So a lot of the decision is because of the good news that we've had over the last 18 months or so. I think second, this has been really well telegraphed. So unlike Bernanke's speech back in 2013, which was a total surprise, the Fed has been taking sort of baby steps towards this decision over the last several months. And almost every economist that I talk to or read reports from has a view of this announcement towards the end of this year already. So it just really wasn't a particular surprise. And maybe the final point, which was the other feature of Powell's speech today, is he tried to separate this taper decision from the decision to raise interest rates and really emphasize that that decision to raise interest rates is probably still some time off, that they have a lot of ground to cover, particularly on the labor market, before liftoff will be appropriate. And I think that also helped to soothe equity markets a bit. So certainly so far so good. Nowhere near the dramatic reactions that we saw during the taper tantrum back in 2013. Markets are calm, if not pretty strong this morning.
That's really helpful to know, and great to be able to hear so quickly after the speech what your key takeaways were from it. If I can ask you one more question, Paul, it would be to look out to next week. Are there any things on the horizon next week that you're particularly watching that we as investors should be tuning into as well?
Well, next week we start to transition into the month of September, so we'll start to get more data on how the strength of the US and global economy is performing in August. A big focus on non-farm payrolls always, and sort of tying into Fed strategy. Are we continuing to see really robust job gains? And I think our sense is the US economy and the global economy is powering through this Delta variant and demonstrating some pretty good resilience. So we're looking for some healthy numbers continuing next week, but that'll be the big focus. Is the economic recovery continuing? And we think it is.
Excellent. Well, we will look forward to next week's Market Recon Review edition on Friday to get an update on those non-farm payroll numbers. Thank you so much, Paul. Unfortunately, that's all we have time for today, but thank you so much for sharing your insights with us, Paul.
Yep, happy to.
And thank you for joining us. We'll see you again soon.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.